Jeff Harte from Sandler O'Neill is with us now. His take on Bank of America numbers and, of course, a preview to Citi. He is among the most accurate of forecasters in covering both stocks, according to Bloomberg data. Jeff, always glad to have you with us. There seems to be a common theme between what we heard yesterday with JP Chase, what we heard this morning from Bank of America. That is to say, trading revenue went down, not a surprise to some on Wall Street, but also improving credit quality. Are these the two takeaways that you think we should be looking at Citigroup's numbers with?
Yeah, I mean, those are definitely the themes of earnings season here. On the capital market side, kind of trading and investment banking, JP Morgan's investment banking was kind of in line with our expectations, and Bank of America was actually a little ahead, which means Citigroup will unlikely disappoint on investment banking later this morning. On the trading side, though, JP Morgan was under our expectations, and Bank of America looks to be quite a bit under our expectations. So that may be setting the stage for tougher trading revenues, and that probably has a bigger impact on Goldman Sachs and Morgan Stanley next week, and we're fairly far below consensus in both of those names because of that already. Looking at the Bank of America numbers, I mean, we're getting we're getting ex-merger charges of 31 cents a share. They released about 9 cents a share in loan loss reserves that the street likes to back that out. So if you do back that out, you're coming at what looks to be a core of something closer to 22 cents a share. We were looking for 23 cents a share, so it was a little bit below what we were looking for. Definitely things look good on the credit front, and that's important. I think the things people may be distressed about, though, is the revenue side. Revenues were below what we were looking for, but we're also more dependent on DVA markups and what looked to be private equity gains that we weren't expecting to kind of help make up for that revenue shortfall.
Jeff, I want to jump in here and ask you a question about Citigroup. Is it possible that Citigroup may not enjoy as much of a benefit from the turn in credit quality, given the fact that it has moved so much of that portfolio to the runoff business, Citi Holdings?
Well, I mean, the runoff business still affects their earnings, right? I mean, so it's still going to feed into it. So it is probably less of a benefit for Citicorp, the good bank, so to speak. But the bottom line numbers should be there. And actually, the interesting thing from Citigroup will be how is the international consumer credit behaving? Because surprising to me, that's really where we saw the first improvement. Citi was kind of a leader there. Now the U.S. is catching up. It'll be interesting to see if the international trends, continue to get better, or whether that's kind of starting to stall.
Jeff, I'm afraid we have to end it there.